Hello, I hope you're doing fine. I hope you're doing wonderful. I hope you're discoing. This is a goal brief. As I predicted, I was lucky to predict the start of the corrective phase in gold, and now I'm at least arguing of a bounce. It could be the conclusion of the corrective phase. It could not. It could be not. I really don't know yet. All I know, as far as my belief is concerned, I'm almost certain we're going to have a bounce in gold. I really don't know if it's the end of the corrective phase or not, but I know we're going to have a bounce. According to my own analysis, that might be wrong, and I've been wrong a lot. You can watch my videos and you would know that. Anyway, this is a TLT chart, and I think I was thinking that we're gonna have an ABC down in TLT. Now I'm changing my mind because of the Fed meeting and the action of last week. So this was the low. This is the buyer zone, by the way. The green thing is the buyer zone. And this was the low, October 11th, 2021. And we trapped some bears here, and we went up and we tested that area. We trapped more bears, and now we are back up again. So I think we're gonna have a bounce. I think the bull trap, the bear trap is telling me that. I also see a lot of positive divergences in TLT, which supports that concept of, okay, good deal. The most important thing to me is we did not go below 30 in the RSI. So by itself, I think I could easily say there's a good bottom, absolutely, because of that very thing. Let me see if I saw any positive divergences, maybe in the stochastic. Let's see. Just, yeah, we have a positive divergence here, a bona fide positive divergence, and it came out of the oversold. It was embedded, and now it's out. So more strength definitely in TLT, and also I think the MACD is bullish too. I'm almost certain, and that's good for TLT. It is. It's beautifully bona fide bullish MACD. So for TLT, what I like about it is it's against the common narrative, because people think TLT should go down because of QT, or bonds go down because of QT, and also because of the imminent interest rate hike in March. Yet it's doing the opposite. So I really love it if the chart is against the common narrative. Okay, I always love that. It gives me a lot of confidence. So bear trap, bear trap. You came out of this congested area, positive divergence, bullish MACD. When these things combine, so you can see it here, positive divergence, bullish MACD. I don't have to explain, and I can show you that many times in the chart, as I stated with the VIX. The setup is so easy, yet people don't see it. If you want to check this out, you can watch my videos when I was lucky also to predict the top of the market and the equity market. So TLT is to go up. Euro USD. Okay, good deal. Euro made a new low, yet the RSI is elevated over 30. Okay. If you remember my RSI rule, if you have a very bad oversold RSI, the price action must retest that low, and we tested that low. We made a lower low. So if we bounce from here, a tradable bottom is in the horizon in the daily and weekly, and also it's against the common narrative. The dollar should go up because of the interest rate hike, and if the chart shows me otherwise, I'm gonna love it. So TLT and Euro, very positive in both of them. GLD, I did post in LinkedIn and also Twitter that I think that we would have a top start of a correction in GLD based on the negative divergences, a lot of stuff too. And that's what happened. Also, I was lucky to know this stuff or to predict this stuff. You can see the negative divergence right here, and boom, it went down really heavily. And also, the ABC is 162 Fibonacci extension, ABC, which came with, so it's a full, yeah, it was here, ABC. So it's full move, 162, started the corrective phase and went down sharply. And now we are at buyer zone at the 62 Fib a retracement, and it found buyers, and now it is forming an inverted hammer. Usually inverted hammer result in good stuff. Also hammers result in good stuff, especially after a sharp sell-off. So you could have it here, you could have it here, you could have it here, you could have it many places in the chart. So I think a bounce, at least a bounce is imminent in gold. Good deal. Newmont. Also, I was lucky to predict the top in Newmont as I posted this in Twitter and LinkedIn. ABC. C is the 186 Fibonacci extension of A2B. It also came with negative divergence. And now I think we have a bounce is in on the table. It might be the conclusion of the corrective phase. It maybe not. At least we have a bounce. So what is bullish about this picture is, by the way, if I'm bullish on Newmont, I'm bullish on all of gold miners. So what the most beautiful thing now in Newmont is this beautiful, amazing bullish candle, spinning top, spinning bottom, sorry. It is beautiful. It shows force, a bullish force, because it was really up. It almost eclipsed the body of the previous day, which shows a lot of force, even though gold was down today, yet the risk appetite was high in that stock. Another thing, we managed to close above the breakout. So we had a consolidation for months. The top of the consolidation was 60.57, and we closed over that at 60.66. So technically we are in bullish mode. Okay, that's for this area in Newmont. Another thing, it found buyers, Newmont found buyers at the 200-day moving average. And in the past, the 200-day moving average always reacts to the price action. If it's bearishly or bullishly, here we have a bullish reaction with a spinning top, rejection from the close to 200-day moving average. We have the same thing here on Jan 11th, and it produced a rally. We had here a resistance, and it produced a retracement in December 17th. We have the same thing here last year. It is extremely obvious the 200-day moving average make the price react positively or bullishly. Good deal. Another thing, as I posted this in Twitter and LinkedIn, we have 5 webs up, and this was one. And as I said, when you have 5 webs up, that means continuation. This is extremely bullish, even though the price collapsed almost 10%. But that's okay because the price structure is extremely bullish, and we might have an ABC zigzag. A is 1, 2, 3. I put 1 and 2 because I really don't know what's going to happen. So I would say A, B, C. So is this a conclusion of the corrective phase? Maybe not. Usually it will take longer time, but sometimes you would take less in duration and sharp retracement, and that's what happened. All I'm arguing right now is we are to bounce, and also we found buyers at the 38 Feb retracement here, and we closed above it. So it's really, really beautiful to have that continuation of the breakout. It shows force, and people wanted to buy. This is GDX. I'm talking about the same thing in GDX. It's an amazing inverted hammer, beautiful inverted hammer. And you have the mirror image here where we have a hammer and a rally, and supposedly hammer, inverted hammer, and a rally. You can see this a lot in the chart. Usually, at least you would have a bounce, at least a bounce like this one. So a bounce is on the table. And that's another thing I noticed in GDX. Every time you retrace or you pull back over between 8 to 11%, 8 to 12%. So let's say 11% or 12%, you always have a bounce. This happened at least 90% of the time throughout the stock's history. Can it behave differently? Why would it now? It's possible. It really is. So, in conclusion, this bullish, I'm arguing of a bounce based on this relationship between price retracement and bounces. Also, based on Japanese candles, also based on Elliott wave and breakout mode, also based on the 200-day moving average for the NIM, also based on the breakout mode too, and also the Fibonacci retracements. Newmont managed to close above the 38 based on this demand area, the 62 Feb retracement and the inverted hammer. Based on TLT, especially, it's against the common narrative. Please like, share, subscribe, and do remember, this goes forever.